Good morning. Good morning.
Good morning.
Good morning, everyone. So let's start. As I discussed in the last class Saturday, when I am giving these questions, they are shared by Cima Institute, Kaplan and all that, not prepared by me. But if anybody had prepared for Cima management case study in the past, not given exam, or maybe gave the exam, couldn't clear, you will find for last 10 years, the same core area A first question is there. Same. It is not changing. Because there are 5 core areas which covers different parts of the syllabus of E2, P2, F2. The institute is saying since 2020 that the student need to prepare based on those core areas, apply the technical and the case study material into those core areas, converse themselves, practice understanding the core areas and writing their answers based on certain different types of questions. And once their core area, 5 areas are covered, then they should be practicing mock papers. Because when we are doing core area A, B, C, D, E, that is 5 areas, they are from different parts of the syllabus. But in exam, nobody is telling you that this is core area A, B, C, nothing. All are mixed. So our in-exam focus is not that this is core area A question or B. It doesn't matter, which I discussed in the first class also on Saturday. But for study, we need to start with one by one core area. Make ourselves ready. I will explain. You will write the answers. You will do your research. We will apply those principles on the basis of our pre-seen material that we will be doing for 1 month. And then after the month, that is in April end, we will start doing mock papers from May 1 to whatever is the exam, maybe 15, 16, I don't remember. For 15 days, we will be doing mock papers. So when I'm giving the questions, I very much know that you don't know this, many of you. But as I said in the last class, you will refer my YouTube videos. You will refer anybody video. It's upon you. You can do ChatGPT research. You can do Google research. You can refer any material. There is no problem. When the question is given, you are bound to submit the answer, whatever you know. When the question is given, you need to submit the answers as per the guidelines. That is, if I said by Thursday, Friday, by Thursday, Friday. You should not be submitting late, because when I will go through your answers, again I will give part core area B. Again, so when the questions are there in front of you, suppose there are 2-3 exercise and there are 2-3 exam style questions, practice task. So 5-6 questions are there. You go through the areas. What are the questions? Do your research the way you like. Doesn't matter. After doing your research, you write the answer. When you are writing the answer, open a Word file. Name the file. Say Bindu core area A answer. In that Word file, type all the familiarization and practice task answers in one file. Keep font size 11. And while writing your answers, don't refer anything. Don't refer anything. Because in exam, you will not be getting luxury to refer anything. You have done your research. Say Monday, Tuesday, Wednesday, you do your research. And Thursday, Friday, you write the answers. Every core area, you take 5 days. Once you submit the answer, I will discuss that in the class. I will discuss that in the class on every Saturday. Whether you have written good answer, bad answer at 360 degree, we will be discussing all core area A, B, C, D, E one by one. So you will do your research, you will write the answer, I will discuss. The same thing we are doing 3 times. We will be able to cover up very well the basic study, the practical study and everything. And then once we go in the May of month May, then we will not be referring anything. No help. Then I will be giving you mock paper. You will be writing the answers in 3 hours without any break, without referring anything. Now you are testing yourselves, testing the waters, how you are writing, how much you are writing. So for the month of April, don't take tension. I don't know this area, this, that, kahan se likhu. Wherever you can do research, just write. Please write. And don't copy paste from anywhere. Whenever I will read your answer, I will understand that whether it is your own word or it is copy pasted from somewhere. I have that brain. If I'm giving you some notes, you can realize it is not written by me. They are taken from different places. But if I'm giving exam, I will be also like you. I need to become a student. So writing the answers in your language is must. Writing the answers in the given time, which is given in the question, that is must. Don't take extra time and see every time how much you are able to write after the research. Do that for 1 month, you will feel the difference. Exam is not tomorrow. 50 days are there, 45 days. Why to take tension today? And everybody study for this much time only. Nobody study more than this. You give exam in May or not, doesn't matter. But whenever you will give exam, you study for 45, 50 days only for Cima. For accounting part, as I said, I'm taking separate classes on Monday and Wednesday. That much is not required. But I realized, I'm going saying about accounting area, students are not able to understand, not able to write. So I decided to do the accounting classes fully. Don't study that much which is required by ACCA and IFRS student. But at least some study you should be doing based on the accounting area also, which is we are doing on Monday, Wednesday. So that core area D and core area E 50%, it's pure accounting. So by the time you will be writing the answers for core area D and E, 20 days from now, I will cover up the accounting part 80-90% already. So you are ready to write the answers without doing any research also. If you are doing a proper study on Monday, Wednesday classes. In core area E, I will take the questions by end of April. By that, I will be dealing with the basic consolidation part. They need to prepare PL balance sheet. You don't need to. You have to have the basic understanding. So that's done. That means you can write core area E answers also. ABC, you have not taught, not teaching on Monday, Wednesday. I will be discussing here. This I am doing every term, term after term, since 2016 to 2025, since when the Cima case study started. And the results are very good. Cima Institute always take action on MCS, SCS for few terms. Now presently they are more easier on MCS, but SCS is more tricky to pass. I think till 2024 mid, I found that SCS result was very good. But now for the last 2 terms especially, the MCS result is very, very good. I always say SCS students are more serious, much better than MCS, because they generally attend the classes, they do the homework, they are very serious, they are more, I mean to say, more senior than you. Because normally in SCS, the average age of a student 40 plus. They are working for 20 plus years, very busy. They are working at senior level, but still they are attending the class, writing the answers. They don't do that. Sir, this has happened. I couldn't write. I am submitting late. They will never say. But MCS student has a problem. I am working, sir. Everybody is working. Don't say all these things. I am working, this, that. You need to write the answers. Then only you can pass. I will check. I will guide you. I will evaluate your answers. I will take you to the right direction. That is the thing we need to do. So if you follow that, there is no problem in passing the exam, because presently MCS, they are generally students are passing if they are putting the proper efforts. So just follow me, as I said in the beginning, because you will ask, kahan se likhun? I have not, I am telling you have not studied. But if you are saying you are a graduate, you have MBA, you have done 6 years of work and all that, you have studied these things, na? Don't take tension. I will start from the beginning only. But you have studied these things. For that reason, you are going for 2 exams. Then why you are taking exemptions? Why you say that I have this caliber? When you have done MBA, when you have worked for 6 years, when you have done graduation, these things at basic level you have studied. Some knowledge is there, not zero. Try to write. Don't say that from where I will get. Do your research, man. I already said in the first class. Not writing the answer, guarantee of not passing. Writing the answer, 50% chance that we will pass. Thinking about the improvement in the class, after writing the answers, discussion in the class and everything, 80 to 90% chance of passing the exam in one go. 5-10% is luck, that nobody can do anything. When we are doing our best, luck will already will always favor us. So that I know, and that we need to follow. Today class will be around 1:30, 1:40, because I have an event at 2 o'clock. You all can attend, your relative and all that, those who are 11, 12 or undergraduate students. So 10, 20 minutes we are going to study less. My purpose is not to complete this entire A part anyhow, 2.5. Whatever we will be able to complete. We need to understand very properly. Not that we are having something, a train to catch, a flight to catch, nothing like that. If not finished, we will do in the next class. We will study more. What's the tension? Don't take tension, no hurry. Please understand the concept very properly. Okay? Now, these familiarization exercises are not going to come in the exam. Exam is not comprehension based. Case study is given, 1 or 2 lines given, and you write answers. Not that. The questions will be coming in the exam like the practice task, which is given exam style task like this. A mail, a write-up, somebody saying something, some annexure, some reference material, requirements. Then you need to write the answer. So I am first of all dealing with this exam style. Then I will be going into the above one. That is, you can say the familiarization questions. I have not gone through anybody's answers because 3-4 students submitted yesterday night. I was preparing strategic case study materials. So I will be doing the needful in coming 2 days. You carry on. After the class, around in the evening 6 to 7, I will give you the core area B questions. You go on writing the answers. Don't stop. A gone. You will say, can I submit A? When you will write B. Somebody will say, can I submit C? When it is gone, it's gone. Now it's gone. Even though if you have submitted till yesterday, it's okay. Not submitted, gone. Now you need to focus on B, not A. In the class, it is going A, but you need to focus B. As I said, if you don't study, you can't pass. I can't do anything. You need to 100% follow me. My responsibility to make you pass. But again and again asking the same thing in the WhatsApp and all that, it just waste of time. Your mind. So be serious. If you are after the class getting the recordings, go through the recordings. Follow whatever I'm saying. My responsibility to make you pass. I'm continuously saying this. Then why you are taking tension? You just follow whatever I'm saying. Let's see whether the result will be positive or not. So practice task A1. When we will be in the exam, like this, it is not written practice task. It is just written task 1. And then 45 minutes start. Once the screen starts, I will advise in the exam, you first of all refer the requirements. Because when you read the requirements, when you read the balance stuff, you will be more focused. You will be able to save your time. When you read the requirement, you understand which area, what topic, what discussion they want, so that when you read reference material and everything, you can correlate with them. Don't start reading, just start reading the requirement. Read the requirement 2 times at least. First, I'm in the exam hall. I'm reading the requirement. Think like that. Firstly, identify and explain the challenges we will face when trying to quantify cash flows to use when calculating the net present value of the acquisition of Prestige here. Again, first you need to do identify, find out, identify, and then explain the challenges we will face when trying to quantify cash flows to use when calculating the net present value of the acquisition of Prestige here. Some organization Prestige here we are going to acquire. To acquire that organization, we are estimating the cash flows. What we need to pay, what we will get, how many years we will get. That cash flows we need to forecast. We are going to acquire Prestige here. And for calculating the net present value, we need to quantify the cash flows. Otherwise, we will not be able to decide how we will take over Prestige here. And for quantifying the cash flow, what are the challenges we are going to face? Those challenges you need to identify and explain. It is written, it is 60%, 15 marks. In exam, they are not writing 15 marks. They will write only 60%. That means whatever your writing time, not reading time, out of writing time, 60% time you should be giving to the first part. Then your performance will be good in the exam. Second, in case the board decides to go ahead, that means the first question, we need to estimate cash flow. Once we estimate the cash flow, we decide to go ahead. We will do this project. We will take over Prestige here. Explain the relevance of our current WACC in evaluating this substantial investment. So when we decide to go ahead, what is the relevance of WACC in evaluating this investment that we should go ahead? Weighted average cost of capital. What is the relevance of the current WACC on this project, whether we should do or not, when we are ready to go ahead? Somebody say that, sir, I am in the class, I have masters, I have done graduation, but I don't know all this. Don't worry. I will start from zero. Assuming that you don't know anything, so don't need to request. But have you done the research when the question is given? Have you tried to write the answers? If you have not done, that is very bad. That is not a problem that you don't know, but you are not working. You are saying, I have not received the link. If I will give you the link 10 minutes before the class, what's the problem? What you will do with the link? I will give the link 1 day in advance. If you are not getting your mail, don't call anybody. But what you will do with them? If I will give you the link earlier, you will say I have not received. So I always give the link very late. It happened in the accounting class 1 day. I forgot to give link to few students. That was my mistake, but it will not happen again. So just focus on what I am saying and following. Don't think link not received and all. I will give to all. इतना सारा चीज देख रहे हैं एक साथ, आप समझ नहीं सकते. You can't imagine. इतना सारा चीज देखना है. Everybody will be given the due respect, the due duties I will perform for all of you. But you need to perform, you need to help me to help you. Somebody is not giving exam in May. Why you are studying? Are you going to give exam in August, November, February, anytime? When you are studying, study properly, man. You say, I don't have time, then don't study. Better. Then you cannot pass. Never. Neither in May, neither any term. So I'm not here to hear anything that you couldn't study and this, that, and blah, blah, blah. I cannot say I have not completed the syllabus. Similarly, I cannot hear, I cannot do because of this. No ifs and buts here. Okay? So what is the meaning of these two terms and everything? We will discuss. But this is not only the question. There is a detail given about the prestige here, some discussion, some annexure that we need. That is not given in the pre-scene. That is given here only. On the exam day, you will be getting this, which is not given earlier. You need to go through. Then you will be able to write a good answer. So now I have started reading from the beginning. You receive an email from your line manager, Megan Connor. Line manager means your senior. You received the mail from the senior to the finance manager. From the senior finance manager, line manager, finance manager, senior is senior finance manager. You receive a mail from the senior finance manager. Now don't think finance manager, it is a question. Think I am the finance manager. I am the finance manager of this salon company. I am. And I'm actually facing this problem. How I will deal with this? If you don't think along those lines, you can't write a good answer. You were thinking that you were writing answer to a question. No, it is not a question. You need to start thinking from that day only. You are the finance manager of this company and you are your boss. Imagine your boss. If you are actually working, who is your boss? Imagine this is your boss. And then today you received the mail from your boss. Opportunity for upmarket growth. Upmarket means for, what do you say, celebrities and all that. High prices, premium price, better service. Opportunity for upmarket growth. The mail given by senior manager relating to upmarket growth salon. I have attached a news report. The board have agreed that the opportunity to acquire prestige here is too good to ignore. Your finance manager has given you a board extract, something discussed in the board meeting, and that he has given you. He is telling you about the discussion in the board meeting. The board have agreed the opportunity to acquire prestige here is too good to ignore. The board discussed in the board meeting that the opportunity to acquire prestige is a fantastic opportunity. It is an opportunity where we cannot, I mean to say, leave away or separate this. We have to. We should be taking over prestige here. That is the board view in the board meeting. Your senior finance manager is telling this to you. Its salons are in prime locations in capital and central cities. So prestige here, not having one single salon. Salon, how many I don't know. The prestige here, which we are going to take over, have salon in very, very good locations. Capital and central cities. In Kolkata, central Kolkata, South Kolkata, whatever. They have the prime locations, capital and central cities, the salons. We could acquire the company at a low price and gain access to these locations. So maybe there is a distress sale. We are able to acquire them at a very low price and then have access to these prime locations. Lovely, we can start our business, selling our products, selling a business very fast. Because whenever you go for takeover, it is called inorganic expansion. In inorganic expansion, from tomorrow you start earning. Tomorrow means some time it will take, but very fast. But you make your salon, develop the firm, everything will take time. Organic development takes time. Inorganic expansion very fast. If our bid is successful, we would initially operate the salons ourselves. If we will be able to give a bid which they accept and be able to acquire, then operate the saloons we will be operating on ourselves. That means it is not a franchisee. We will be operating this on our own. This would give us time to rebrand them as 𝐄𝐸𝐚𝐢𝐥 salons, because our upmarket salon name is 𝐶 salons, and to assess each salon's ongoing viability. These salons which are in different locations, we will be able to acquire, we will rebrand our 𝐄𝐸𝐚𝐢𝐥, and we will be able to analyze the performance of each one. In the long term, once fully established, we would offer them as franchise opportunities. The person to whom we will be able to make for the time being running ourselves, later on we can make the franchisee model, which we want to do, but we are not going to make them franchisee model now. By taking the time to ensure they are successful, we will be able to secure a higher franchisee fee. When it will be successful by running ourselves, then we will be able to collect a very good franchisee fee and ongoing royalties for each salon. Then if we offer them to the franchise immediately, if we offer franchisee now, we get less fees, less royalty. But when it will be successful, then we will be able to get very good revenue. What a lovely. Hasim Ibrahim, CEO, believes that the cost of acquiring the company would be $20 million. Our CEO is saying that we will be able to acquire them at $20 million. All this is said by senior finance manager. Then Luina Makondi, finance director, senior finance manager boss, finance director, has asked me to start the investment appraisal process. FD asked senior finance manager to start financial appraisal, investment appraisal for acquiring Prestige here. I need your help. Senior finance manager is asking your help. You are for him. He's asking your help with the two matters which we have already read. For analyzing the cash flows, what are the challenges, identify, explain, and in taking the decision, what will be the effect of current WACC. The reference material, something more written, which will help you to prepare a good answer. Daj Land Business Daily, a newspaper article. Prestige here closes salons. Prestige here closes salon. In the newspaper it is there. Prestige want to close their business. Prestige here, the upmarket hairdressing chain that operates in capital and central cities, has recently been the subject of a fraud investigation by the Daj Land tax authorities. Oof. Why they are selling? Because they have the fraud. Daj Land tax authorities identified a fraud. Last week, its owner was convicted of fraud and sentenced to 10 years in prison. Lamba. So why the Prestige here is closing their salon? Because of this. Today, as a result of the difficulties faced by the business, it was announced that it is being put up for sale and that the lease holders of the salons are happy to transfer the lease to the party that acquires the company. There are many leasehold, maybe all don't know. And the leaseholders, lessee, is ready to transfer the lease rights to you, those who will get the Prestige here. Task prepare the work that Megan has requested. It should be in the next line. PDF, sorry. Task prepare the work Megan has requested, in total 45 minutes, 25 marks. Just I'm giving 2 minutes. Think logically that this is not a part of the pre-scene, related. But every question in the exam will be like this. There will be reference material, there will be some board members meeting discussion, there will be some mail, there will be some trigger, and then they will be asking some questions. You cannot start straight away writing. You need to be ready in your mind with some basic knowledge, with this entire story, with the pre-scene, how you can write a good answer, of what length and all that. First of all, you need to make yourself ready. Then you will start writing an answer. Those who have submitted the answer, those who have not submitted, think for 2 minutes. Don't need to say anything. Just think for 2 minutes. I'm coming in 1 minute. You think for 2 minutes. In business or in life, we need to take two types of decisions. One is the decision which is just for today, tomorrow, short term. And one is the decision which we need to take for long term. The long term decisions are going to affect our whole life. Maybe the long term decision is specifically for 4 or 5 years, but it is going to affect the whole life. This is a long term decision. Acquiring the prestige hair salon and then running it for some time on ourselves, and then selling the franchisees, those which are successful salons, and then getting the franchisee fee and royalty and all that is actually the whole life decision for this company, for our company, for Trimere. Whenever we are taking a long-term decisions like this, they are very difficult to take because you can forecast what will happen today in 2-3 days. But forecasting what will happen 5 years down the road is very difficult. Nobody knew that Trump will come and will start doing all these dancing. You can't forecast. You didn't know. So whenever you are taking a long-term decisions, it's not easy to take. But that doesn't mean that we will not take a long-term decision, we will not forecast, we will not estimate, we will not apply our brain logically, rationally. That's not allowed. We can't do that. Because when the long-term decisions are very important, then more thought process, more detailing, more efforts need to put in forecasting everything. They cannot be done now. So what we are saying that whenever we do any long-term decision, it is covered by the word passive. Planning, analysis, selection, implementation, review. Not to be written in the exam. You will say, sir, if I write, you can. But I'm not saying what will be the answer for this question. First of all, let's bring at the point where we can start writing the answer. So first of all, I'm discussing that. Any long-term decision can be taken by analyzing these factors, which can be covered by the word passive. Planning, analysis, selection, implementation, review. Planning. If you are in a business, if you are in a position, you cannot do everything. If suppose this company is in salon business, then they cannot do everything in life. They have limited resources. And with the limited resources, what are the things they can do for their growth? Are certain options. Maybe they can acquire prestige here. Maybe they can go in some different other country and start the salon business in that country. Maybe in the salon, maybe they are not offering other than the salon, there are different kinds of services. Maybe along with selling the salon, we can offer some different types of selling. What do you say? Dresses and all that. I'm just hypothetically saying, when we are in a particular business, when we have a particular capital, when we are in the business for a certain number of years, the resources are limited. With the given resources, what we can do? What are the possibilities which we can do? The planning is that only. Given the resources, given the competencies, given the knowledge, given the skills you have, what are the possible projects for the long term you can do, you can identify? It's the first part in any organization when you want to do something new. Planning. Once the planning is done, you are sorted with 4 or 5 kind of projects. You can do only one because you have that much resource, but you are sorted with 4 kinds of possibilities. For each possibility, you will be doing analysis. P for passive, P for planning, then A for analysis. There are 4 kinds of analysis we do. Technical analysis, marketing analysis, financial analysis, environmental analysis, technical analysis. Whatever we are thinking, is this possible? Is this doable? Is this feasible? Each we have the resources to do that. Maybe we thought, but we don't have resources. So just ख्याली पुलाव बना के कोई फायदा नहीं है. We don't have the capacity to do that. Leave it. Financial analysis, whether we have the money to do that. If we don't have, from where we can raise the funds? What are the possibilities? Whether it will be giving the proper income, whether it will be giving us a proper return. This question is focused on that financial analysis. Marketing analysis. The product which we will be making will be sold out or not. The resources which will be required will be available or not. The marketing is there for not. This includes that also. Because you will be running the shops on your own and you will see what market they are able to attract. So marketing analysis. And environmental analysis. Social analysis. That whether the project is beneficial for the society. Is it going to help the development in the society, the nature, the culture, or it is going to adversely affect the society. If it is going to positively affect the society, convincing the society, getting the funds for the project will be easier. But if it is going to adversely affect the society, it will be creating problem to implementing the project. These all four analysis we will be doing for all the identified projects which we have done the planning. Planning done, we are doing analysis of all four aspects about all the projects. After the analysis, planning, analysis, passive, S for selection. Out of all the projects, after doing all the analysis, we will select one. The selection involves calculating NPV, calculating IRR, calculating payback period, calculating accounting rate of return, calculating discounted payback period, calculating profitability index. Many things are there. Every long-term project selection based on this selection, different criteria are there. Which criteria we will be using to select? Once we select, now we are left with only one. We planning time, we have identified 4 or 5. We did analysis of all the 4 in all the projects. Now in the selection done, we are left with only one. Now that one we will select and now implement. We start doing the work for that. Here, if we decide that we will take over Prestige here, then we require funds. If we don't have funds, we take borrow, we issue shares, we are already a listed company, or we take private placement, whatever, or we will be borrowing money, issuing debentures, whatever. Then we need to do some due diligence about this company, Prestige Air, because they are already under tax violation. So maybe the owner are imprisoned and all that, fine. But later on, if we take over, those things should not be arising on us. It should not be creating a bad will. So you will be doing a due diligence about the accounts, about the finance, how the fraud occurred. Is there anything left which we need not be facing, and all that you need to do. If you say that the franchisees are already there, some of the franchisees are not interested in selling their franchisee. So we can't do the partial thing. What can we do to acquire from them? What price we need to offer? Even though they are saying that it will be available at a low price, but not all the salon. Maybe some of them are not available at a low price because the franchisee is not ready to sell. He wants a very good price, or maybe he wants to continue that thing. But I mean to say that now when you run on your own, you require more staff, you require a team, you require to change branding, you need to change some furnitures and all that. Implementation involves many things, sir. It is not that food is there on the plate, you start eating. First, you need to bring the food on the plate, in the plate. So for that reason, you need to implement. You need to make a project team. Somebody will be senior, junior, this, that. He will be doing what? This is the time, this is the cost. During that period, we will be implementing everything. A project is very good, but if it is not implemented properly, it will be failure. It's good, but because of implementation, it becomes failure. Cima case study is easy, but because of it is not implemented properly, it will give failure. Why the student will fail? They are not following the instructions. You will say, always you correlate like this, what I should say. When you call me how to write the answer, what I should say. I am already saying everything in the class. Then again, need to do the recording always, must, so that you don't ask illogical things. So implementation. Once the implementation is complete, project starts. We have given the money, we started, the customers started going to come, we are taking the money and all that, done. Review. Passive, I for implementation, R for review. Whatever we thought, whatever return we expected, whatever customers we expected, whatever revenue we expected, are we getting? If not, why? What happened wrong? Where the estimation was wrong? What actually happened which we have not forecasted? So that we can rectify that, and going forward when we do the new project, we will not be repeating the same mistake. Review is very essential. You have written the answer. I will reviewing them. Very essential. So that I can guide you where you are doing the mistake, what problems you are doing, what you need to improve, unless and until you have written genuine answer. Not that you have copy pasted from somewhere and written, which I will understand. And I will be telling that also. Maybe you will say that, sir, I have not done. But the language cannot be like that, sir. This language is a bookish language. When you and me will write, we'll have some different wordings, different comma, full stop. Bookish language is different. Our own writing is different. Okay? It's not a question of convent educated or anything. So review need to be done. And with the review, we can improve the project. And with the review going forward, when we do new things, we will be not repeating the mistake which we have already done. So that in long-term decision making, we will be becoming the perfect. All these things which I am saying, not related with the write-up directly, not related with the pre-scene directly, but those basic knowledge is required to start your answer. Now in the selection, the different methods are NPV, IRR, payback, accounting rate of return, profitability index. Many methods are there. What are these methods? All the methods are divided into two categories. One is discounting criteria. One is non-discounting criteria. Discounting criteria means using time value of money. Non-discounting means not using time value of money. Discounting methods are NPV, IRR, discounted payback. Non-discounting methods, payback, accounting rate of return, urgency method. All these are non-discounting. Which one is best? Best is NPV, but why then other methods are there? In different situations, even others become better than the best one. Many situations are there. You cannot say that always the selection will be done based on NPV. It's not sure. It depends upon situations. The discounting methods consider time value of money. The discounting methods consider time value of money means what? Suppose today I am giving to Bindu $100 and she will give me the money back after 6 months. Whether I am ready to accept $100 after 6 months or I want more. If I have given as a friend, as a relative, then in that case, maybe I'm not charging any interest. But if it is a business, it's not a friend or relative. Maybe you are giving loan to a friend, but as a business, not as a friend and relative. Then not a single possibility is there that I will receive from Bindu $100 after 6 months. I'm not interested in giving $100 now. Bindu need to give me 102, 103, 104, 105, whatever we decide between both of us. So whenever you will invest your money, you want return. Giving it to anybody, making FD, investing in assets, investing in the project, you require return. $100 would become 105 after 6 months or maybe more. When we are doing a project, we are investing in the project today, and we will be getting the cash flows from the project in 5-10 years. Suppose we are investing $20 million today, and the project we will be getting the cash flows for 10 years. So in 10 years, if we will be getting $20 million, we are not interested in doing the project. We are investing $20 million today. We want greater than $20 million. How much greater? Depend. How much return you require. If you invest in government securities, if you do fixed deposit in bank, India return is around 6 to 7%. But if you invest in the business, if you invest in the share market or anywhere, risk is high. And when the risk is high, you want more return. So maybe suppose I'm talking about India. If I invest my money in any business, the existing business or any business, I don't think so I want less than 14-15% in India. Because in India, it's at least greater than 10%. Say 15%. So if $20 million invested today, and if it is 1 year project, then I should be getting at the end of 1 year 20 million plus 15% of 20 million. That is 23 million. But if it is 2 years project, then on 20 million, I should get back my 20 million. And in 2 years, every year I should be getting 15% return. If it is a 3-year project, then I should be getting in 3 years my 20 million back. And I should be getting every year 15% for every year for 3 years. If it is a 10-year project, then I should be getting 20 million back, and I should be getting 15% every year for 10 years. Whatever calculation we will discuss, this is not a calculation, simple understanding. I am giving to Bindu. Bindu need to give me my return and the money also, $100 also, and the return. If I am investing in the project, I should be getting $20 million back, and I should be getting every year the return which I want, which is 15%. When we will be doing the project, every year cash flow will not be same. Initially, the sale will be less. Later, it will be more. At the end of the life, you will be selling the assets also. Different cash flows will be getting. We need to estimate those cash flows. By investing $20 million, how much cash flow we are going to get first year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. In exam, you are not doing. In practical life, you need to do. Estimating the cash flow will take a month. You are going to write the answer in 45 minutes. Estimating the cash flow will be taking a month, maybe more than that. 1 month is very less time. They are asking you in 45 minutes, think about the problem which you will be facing in estimating the cash flow, and then explain those problems in estimating the cash flow. It's not a simple thing. Because in the practical life, something you will be doing in a month, they are asking you to do in 45 minutes. And no problem, we will do. We will try our level best that we will be estimating the cash flow for all the 10 years. The cash flow will be different. What is the difference between a cash flow and profit? Profit means accounting. Sale minus material minus labor and all. But then what is the cash flow? The cash flow, no depreciation. You are not giving depreciation to anybody. The cash flow, only the money received, not credit sale. The cash flow, only the payment done, not the payable. It's not accounting principle. In accounting, you can improve profit, you can reduce profit by following dubious accounting policies. But in your pocket 100, you can't show 150. It is not PC Sarkar Jadoo is going on. In your bank account, in your cash, whatever in your pocket, that is the cash. So there is, in cash, no dubious story. What is there is there. When we take project decisions, we should be estimating the cash flow, not the profit. Not the accounting, management accounting. Financial, not the accounting, financial accounting. So cash flow we need to forecast. There will be different figures every year. There will not be same figures. But every figure ultimately is giving me what? 15% return every year, because that is my requirement. $100 would become $115 after 1 year, if it is a 1 year project. But if it is balance year, then I should not be getting full 115 first year. Later also. But $100 should become 115 after 1 year. $1 should become 1.15 after 1 year. $1 is present value. 1.15 is the future value. $1 today should become 1.15 after 1 year. 1.15 after 1 year, that means today it is $1. If it is 1.15 later, 1 year later, today it is 1. So if it is 1 year later, 1 rupee, then how much it is today? 1 divided by 1.15, the whole thing into 1. What I'm saying? $1 today, 1.15 after 1 year. 1.15 after 1 year, value today is 1. So $1 after 1 year, what is the value today? 1 divided by 1.15, the whole thing into 1. When you will solve, don't need to solve. Suppose you are getting 0.857. Suppose. I'm saying it is wrong. I'm just hypothetically taking example. 0.857 means what? $1 after 1 year. Value today 0.857. $1 after 1 year. If you deduct 15% out of that, value today is 0.857. Similarly, $1 today. After 1 year, 1.15. Further after 1 year, that is 2 year, 1.15 plus 15%, compounding. 1.15 plus 15%. Suppose it is coming 1.33. Suppose. $1 today, after 2 years at the rate of 15%, 1.33. 1.33 after 2 years. Today it is 1. So $1 after 2 years, value today. 1 divided by 1.33, the whole thing into 1. Suppose it is coming 0.728. That means $1 after 2 years. You deduct 15% of both the year, then you will get 0.728 today. In technical language, this is called discounting factor. 0.857, 0.728 are called a discounting factor. What is a discounting factor? Value of $1 after 1 year, after 2 years, after 3 years, after 4 years, after 5 years, today, at a particular return, at a particular interest. In my example, it is 15%. $1 after 1 year, if I will deduct 15% from that, value today 0.857. $1 after 2 years, if I will deduct 15% of 2 years, value today 0.752. $1 after 3 years, if I will deduct 15% of 3 years, value today 0.65 something, whatever. If I'm not giving a case study exam, if I'm giving Cima P2 exam, if I'm giving any finance exam, these discounting factors are given in the exam question. Forget about exam. In the practical life, the discounting factors are freely available on Google for every interest rate, on Excel, on books, everywhere. I'm just saying logic of these discounting factors. We don't need to write that this is the discounting factor in exam. But somebody will say, I don't understand. I'm starting from the basics. Assuming you know zero. Zero. So don't take tension. In the project, we are investing $20 million. How much we will get first year, second year, third year, fourth year? Not given. We need to estimate. Suppose first year we are getting $1.2 million. Second year, $2.3 million. Fourth year, $4 million. Blah, blah, blah. How you will forecast? We will discuss. But we are getting 10 year, 10 different figures. We are investing 20, and in 10 years, we are getting $35 million. 20 million we are investing today, and in 10 years, we will be getting, if I add up all the figures, it is giving me $35 million. Should I do the project, Bindu? Should I do the project, Jahana? Should I accept the project, Chinmay and others? 20 million I am investing, and I will be getting in 10 years $35 million. So should I invest? Should I do the project? Asking to all of you, sir.
Sir,
Yes, sir.
sir, we need to calculate the NPV. And
I will
we,
need to calculate, sir.
sir, first of all, I need to work out for $20 million WACC, the source of fund,
What is this WHCC, sir?
weighted
What do I
average
need to add, sir?
cost of, huh?
You need to go into deep. For everything, you need to say why. ठीक है?
Sir,
हाँ.
this WACC is working capital cost, weighted average cost of capital. First of 20 million to fund the 20 million, I would need to know the cost of this fund. So that is the discounted figure. This WACC figure will be my discounted figure, means cost of fund. And based on this cost of fund, I need to prepare the cash outflow, my NPV. Suppose today I am investing 20 million and I'll get 35 million after 10 years. So what is the net present value I need to know? Then only if it is positive, then I'll invest. If it is negative, then I'm not going to invest.
But still, it is not clear why I will calculate net present value.
Hello,
Sorry,
sir. Can I say?
Yes.
Okay. Yeah. Sir, am I audible clearly?
Yes,
I
you
changed
are
my
audible.
mic today. Okay, sir.
हाँ.
Sir, actually, we are investing $20 million today. So in that case, first of all, we will have to estimate on justifiable ground, like what can be the possible cash flows in the upcoming years, like 10 years. And accordingly, we will use suitable discounting rate, maybe weighted average cost of capital, maybe required rate of return, whatever it may be. By using that rate, we will calculate present value of cash flows, and we will compare the total present value of all the years with the investment we are making today, like $20 million. And we will say we will calculate if there is a positive net present value or it is negative net present value. So this is one of the method we can decide whether we have to take up this
But
project
why
or
we
not.
are calculating present value?
Because the amount we are investing, this is the amount we are spending today, and the amount which we are getting over the number of years in future. And whatever amount we are spending today, it has opportunity cost. We can earn some other money in form of like other return or bank interest or any other thing. So we will have to ensure whether at least the alternative cost or opportunity cost we must derive out of this project. So I think that is the reason.
Before asking all of you, what I gave the example, कि $1 after 1 year, and if I will deduct 15% from them, then the value today 0.857. Hypothetically, $1 after 2 years, and if I will deduct 15% for both the years, then the value today 0.728. $1 after 3 years, and I will deduct 15% for all the 3 years, 1 year, 2 year, 3 year, 15. Then the value today is 0.618. These are our hypothetical figure. That means when we are saying $1 value today, it is a present value. It is $1 value. Present value, $1 value is actually deducting the interest. Present value means after deducting interest. Future value means including interest. When we are doing a project, maybe 20 million we are borrowing, maybe 20 million we are taking from shareholder, maybe 20 million we are issuing debentures, maybe for 20 million we are issuing preference shares, whatever we are doing. Or maybe 20 million we have in the business that we are using. Retained earnings, it is there. From wherever we are using the money, there is a cost. If I'm borrowing, the bank need to be paid the interest. If I'm getting the money from shareholder, the shareholder want return. If I'm using my earned money, that earned money can be used for other purpose. It can give return. I want the return. That return is called either required rate of return or weighted average cost of capital or anything. Whatever language we say, doesn't matter. It's a funny language, technical language. So I said that, suppose in the project, we want a 15% return. So we should be getting 20 million and we should be getting in 10 years 15% also. Then the project is viable, because those who have invested 20 million, they want 15% return. So 1 year cash flow, I will find out present value. Means what? $1 value after 1 year, today, 0.857. So whatever the cash flow in the project, say 1.2 million, 1.2 million into 0.857 is giving you the present value. Means what? You are deducting 15% from that. $1 value 0.857, $1.2 million value 1.2 into 0.857. From 1.2 you are deducting 15% income, which you want. Deducting means those who have given $20 million, you are giving them the return of first year, that is 15%. Again, second year figure is 2.5. 2 years later, $1 value today 0.728. 2 years later, 2.5 million value today, 2.5 into 0.728. It is deducting 2-year interest. That 2-year interest you are giving to those who have invested 20 million. So when you are finding out present value, you are giving the return to the investor, those who have given 20 million for the project, whoever. That is WACC, that is required rate of return, whatever. When we are calculating present value, then we are giving them the return on their money. Now the total present value is 20 million. The total present value, after deducting the 15% from all the cash flows for all the years, getting in pocket, return, the total present value is 20 million exact. 20 million is the investment and the cash flows for 10 years. Present value at the rate of 15% means the return taken from them, taken in the pocket, given to the investors. And then the total present value after the return deducted, the total present value of 10 years, 20 million. Should we do the project, Mr. Surojit?
No, sir.
Why no, sir?
That is equal, no? I'm not going to get any extra. If it is 21 million, then we should go for that.
In management case study exam, you want to pass or you want to score rank?
I want to pass.
Okay. So you gave the exam and you passed. So you will be happy or sad?
Happy, sir.
Happy, sir. But believe me, I'm telling you today, when you will pass, and suppose in the class, so many students are there, all scored more than you. You passed, but everybody scored more than you. Then whether you will be happy or you will be sad?
I'll be happy.
You understand that when we get our desired outcome, what we desire, we get. We should be happy, na? Why we will be sad?
Okay.
So when you say that you want 15% return, 15% you have already kept in your pocket, deducting present value means what? If 1.2 present value is 1, so 0.2 gone where? 0.2 gone in the pocket. You got your 15%. And then you are getting your 20 million back, because the total present value is also 20 million. So why you will not do the project, sir? When you want to pass, you pass and you are happy. Here
Sir,
you want 15%, you are getting 15%, still you are not happy, sir. Why?
Sir, just one thing need to clarify, sir. Here, that means this my IRR is also 15%, because this present value and
IRR, WACC, required rate of return, all are English language, all are same.
huh,
It's
so that
return,
okay.
15%. So you got your 15% and you got your money back.
Okay.
Still
Okay.
you are not happy, sir. Why, sir?
Okay. Okay, sir.
Technically, when you read any book, it is written NPV 0 project will be accepted. Because NPV 0 means not you are not earning. You are earning what you require. Whether you say IRR, whether you say WACC, whether you say required rate of return, it's all synonyms. They are all same. You are getting your desired return when NPV is 0. So why you will not accept the project? You should be, man. Because you always said, every time, every question, I will be happy in MCS pass. Hai? So why you will be disagree with this? You require 15%, you are getting, still you are not satisfied, sir. Then say, I want 16, 17%. Don't say 15. But in practical life, we will not do. Why? Because for 10 years, if you are estimating that exactly you will get what you want, when you do the project, you will not get that. Because normally it happens, what we expect, we receive less than that only. Generally it happens. So in exam, you can't write NPV 0, I will not do the project. But in practical life, we will not do. We are not going with bookish language. In practical life, we want NPV to be positive so that we will be able to get our desired return without any tension. Otherwise, we don't invest in the project. So from practical sense, you are correct. But technical sense in exams and all that, you are wrong. If the NPV is 0, the project is acceptable. Because you are getting your 15%. After that, the total value is equal to your investment, 20 million. You are getting that also. What's the problem, man? Why we will not do? What is NPV? NPV is giving you the return. NPV is giving you your initial investment, all the things. The return is calculating present value. Deducting from the values, the return. Present value means deducting the interest income. And then the total present value covers 20 million. Present value of inflow minus outflow. 20 million minus karne ke baad, it is positive or 0. We will do the project. If it is negative, we will not do. Why? Because then you are not getting your 15%. Because if you deduct 15%, you are not able to get back your principal back. 20 million you are not getting. So if it is negative, we will not do. But if it is 0 or positive, we will be doing the project. Whatever will be the NPV, if it is positive, we always say that it is straight away in a listed company, increase the share price. Because that extra will be added to the shareholders' wealth. And if the share price in the market for a company is say $100 rupees, because of the project which is having positive NPV, the share price in the market is straight away increased by the value, by the positive NPV value. Even though it is not sure because you are going to do the project, you have decided to do the exact income you don't know. But we always think in practical sense, this is going to be increase in the wealth of the shareholders. NPV is directly correlated with the wealth of the shareholders. Any project positive NPV increase the wealth of the shareholders. Straight cut relationship. But all other methods don't have this relationship. Explaining this NPV to a non-finance person, engineer, doctor, anybody, is a very difficult task. Because we all are finance person, but we are not able to explain what is NPV. So discussing this to a doctor or somebody non-finance, non-accounting person is actually doing like this. Believe me. Don't try to explain this to anybody. So maybe we are understanding each NPV is giving direct correlation with the shareholders' wealth. It considers time value of money. It considers cash flows. All good things are there. But one bad thing, it cannot be made understand to everybody. In the board members, in the decision-making team, there are many non-accountant, non-finance person, engineer, IT, those many. They are also the directors. You can't explain them. So how you will convince them that the project should be done? That means NPV cannot be used every time. Even though it is technically one of the best method, but we cannot explain NPV to everybody, all Tom, Dick and Harry in this world. It can be explained only to finance and accounting knowledgeable person. There are some other problems with the NPV. Estimating the cash flow, it is not sure. Discount rate, required rate of return, IRR is not sure. Then life of the project is not sure. Estimating at the end of the life, the salvage value is not sure. So all these are estimation. And estimation can never be perfect, can never be 100% correct. Estimation generally many times are wrong. The other problem with NPV. Presently, we are saying that in the project, we require 15% return because presently in the market, based on the interest rates and all that, it is 15. But the project will be of 10 years. There will be so many times interest rate changing in the market. Reserve Bank of India, Federal Bank of US, Trump, this, that, so many things happening. How can we say that for entire 10 years, we want the same return? No, man. When we are getting the return in between, first year we are getting 1.2, second year we are getting something and all that. What we will do with that money? We are deducting our 15%, but balance what we are going to do. Are we not going to invest that money somewhere? Maybe in the same project, maybe somewhere. Because of the project, we are getting some income, some cash flow. We are going to invest. Who will consider that in the project? We are not considering that. So it's not that NPV is a perfect method. The problems are there, man. And every method has a problem, more than the NPV method. So best to koi bhi nahi hai. All methods are good. Nothing is best. But in different situations, different methods are best. But long-term decision making involving cash flows, required rate of return, time value of money and all that, NPV is the best method out of all the methods. It considers time value of money. It considers required rate of return. It considers the cash flow, not the profit, which is dubious. It considers actual cash flow. And it considers the opportunity cost of investment and everything. It is directly correlated with shareholders' wealth maximization. But the problem, estimation, forecast, the problem, making understand to non-finance person, the problem, whatever intermediate cash flows we are getting, whether they will be invested or not, where they will be invested, that we are not considering here. You will say, if want to consider where we will be investing, that also can be done. Not discussing that, not required. This is enough for our level. Not tricky, but we need to digest one by one all the methods. The second method in this category, IRR. So IRR is not a return, which Sujit was saying. What is IRR? Let's understand properly. If I'm giving to Bindu today 100, and 6 months later, Bindu is giving me 105. So what is the return to Prakash Saraf?
5%, sir.
Motichur ka laddu, sir. For $100, he is giving me 105 after 6 months. A return is always said per annum, not 6 months. So 5% in 6 months, that means in 1 year, 10%. Actually, 10% is wrong because compounding. 100 become 105. Then 105 pay 5% will become 110.25. So annual return is 10.25%. If I'm giving to Bindu today 100 and she is giving me 105 after 6 months, the return we will say 10.25%. Not 5, not 10, 10.25%. Because in finance, we always use a compound interest calculation. We can't do simple interest calculation. If you invest in bank, FD, say 7% interest for 5 years, the bank will not give you 100 plus 7%, 777, 135 after 5 years. No, sir. First year 107, second year 107 pay 7% plus 7%. So it will be coming 150 around in 5 years. Bank is giving you 100 to 150 in 5 years at 7%. Always finance compound interest. And always the interest rate will be set per annum, not 1 month, 2 months, 6 months. So if I'm giving to Bindu 100 and she is giving me after 6 months 105. The return to Prakash is 10.25%. Why this is called IRR? 100 and 105 each equal at the rate of 10.25% per annum. On 100 at the rate of 10.25% per annum for 6 months, it will give you 5. So 100 becomes 105 at the rate of 10.25% per annum. The outflow and inflow, the beginning and the ending figure will be equal at a particular rate. That rate is called IRR. IRR means what is the interest included in the cash flow. If I am taking loan from bank, $1 million, I will pay to bank after 5 years, $2 million. IRR is not the required return. IRR is the return which we will be getting if we invest our money anywhere. I am giving to Bindu. Bindu is giving me after 6 months. What is the return I am getting? That is called IRR. So if I am talking about this question, 20 million we are investing. First year, second year, third year, fourth year, fifth year, sixth year, seventh year, eighth year, ninth year, 10th year. We will be getting those cash flows. Against 20 million, we are getting these figures for 10 years, cash flows. What is the return we are getting? This cannot be calculated like I said for Bindu. This requires a calculation, Excel calculator, then we can calculate IRR. But what is IRR? Whatever we are investing, whatever cash flow we will get, at what rate they both are equal. 100 to 105 is equal at the rate of 10.25% per annum. So 20 million equated with 10-year cash flows. What is the rate we are getting? That is called IRR, not the required, what you will get. IRR is internal rate of return. The return which we will get if we equate the outflow and the inflow. In NPV, the rate is given. We are calculating the present value of inflow. In IRR, the rate is not given. We want to calculate that all the cash inflows present value will be equal to 20 at what rate. Earlier I said suppose present value is coming 20 only. That means the IRR is 15% because it is exactly equal. IRR is the return which we will be getting from the project. How you will decide whether you will do the project? If your required return is less than 15, do the project. IRR is the return which we will be getting, but how much we require? If we require less than IRR, we will do the project. What we require is required rate of return or a WACC. That is not IRR. IRR is the return which you will be getting. So if the IRR is greater than the required rate of return, then you will do the project. Otherwise not. This is also a good method. Why? Time value of money, discount rate, cash flow. But if suppose we are getting IRR 20%, fantastic, lovely. We should be doing the project. Now, IRR 20% is not coming in my pocket. In my pocket, money will come. In my cash, in my bank, money will be there. Percentage is hawa. Hawaii. It is not a money. Second thing, suppose there are two projects. One project IRR 20%, second one 18%. You will say, I will do 20%. Obvious, yes. But 20% means NPV $5 million. 18% means NPV $6 million. Now you want money or you want percentage, which is hawa. 18% is giving you 6 million and 20% is giving you 5 million. So Sujit, what do you want to take? 20 million, 18 million, 18 or 20%. What one you want, sir?
Sir, I'll go with the percentage because if I want to earn more, then I need to invest more, na? The percentage wise, I'll select the where I'll get higher percentage.
That means there are two projects. In one project, NPV is 7 million A, and in the other project, NPV is 6 million.
Okay.
The project where NPV 7 million, the return is 18%. And the another project where NPV 6 million, IRR is 20%. So you will do the second one.
No, first though, I need to choose the NPV portion. Then the NPV is higher than the second project, 7. Then I'll select my criteria for, I'll go
But
with
they are different.
NPV.
In one project, NPV is higher. In another project, IRR is higher. How you
Then
will
I'll
choose?
choose the NPV.
That means you don't select the IRR. Why?
Sir, my net present value though is more than respect to second project, and IRR though
As I
anyway.
said in the beginning,
Hmm.
whether IRR is coming anywhere, it's a percentage. It's coming in pocket, it's coming in bank, nowhere. Money, paisa, rokada, 5 million in your bank account, 7 million in your bank account. Money is
Right.
giving you actual cash flow. IRR is not giving you actual money. Maybe the percentage is higher. Normally, when we analyze projects, the project which has higher NPV, IRR for that project will generally be higher, but it can be reverse. That means we need to go slightly deep into IRR. Why this may happen? Suppose I have invested 100. And now, at today I invested 100. I got 1 year 500. At the end of 1 year 500. And the next year, outflow 600. In zero, I have invested 100. First year, I'm getting 500. Second year, it is minus 600. The project over. So whether I should invest in the project. I'm investing 100 at the end of 1 year, 500 at the end of second year, minus 600. Should I invest in the project?
Sir, I need to check the second year return also, no?
The return is only one. In 10-year project, you need to calculate return only one, not 10 return. If you are investing 20 million first year, second year, third year, fourth year, fifth year, sixth year, by equating all, what is the return per annum in 10 years, not two returns.
Okay.
So when you are investing 100, you are getting 500 and you are outflow 600 second year, the return will be only one. But whatever may be the return, are you interested in this type of project?
No.
Why?
So at the end of first year, I'll get 500, but after that, I need to, the entire cash flow will go out, no?
Negative 100 and 600, 700 and inflow 500, 200 out. But IRR will be positive, sir. When you calculate IRR, it will be positive. Why? Because against 100, 500 is 5 times. But against 500, 600 is not 5 times. The IRR give huge importance to the initial cash flows. Maybe later you are losing money. IRR is calculated by formula, by Excel, by programming, whatever. We don't need to calculate IRR. But when you calculate IRR in this type of project, it will still be coming positive. So
Yes.
if you decide based on IRR, it is dubious. It is giving you wrong signal. Because you are losing money, but still IRR positive. How you will decide, man? Actually, in this type of example, which I said 100 outflow, then 500 first year and 600 second year minus, the IRR will be 2 figures. Have you solved anybody? X square plus 2x and plus 5. Or x square minus 2x plus 5. Can we solve x value in this? Not required. I'm just asking. X square minus 2x plus 5 plus 10. Solve x. Anybody can do. Can you remember what you did mathematics in 7-8 class? Suraj ji, x square minus 2x plus 5. Can we solve?
Yes, sir.
We need to make middle term factor or Sridharacharya and all
Yes.
that.
Yes, sir.
When we apply that, we will be getting two values for x. One value will be minus, one value will be plus. But both are correct. Both are giving equal 0. Similarly, when minus 100 first year, 0. And first year 500 plus, second year 600 minus, it will be giving two values, one value plus, one value minus. IRR is plus 20%, IRR is minus 5%. How you will select, man? If you think plus 20%, fantastic. But the same project is saying minus 5%, fantastic. But NPB will never be two figure, only one. NPB will not be behaving like this. IRR has a problem of mathematics. IRR has a problem of two different IRR. IRR has a problem of, in the beginning, cash flows are given more importance than the later cash flows. And at the same time, IRR we are not getting in the pocket. IRR is not affecting the net worth of the shareholders directly. It is indirect effect. So in place of IRR, NPB is a better method. But if a doctor, you say NPB 1 million going above his head, you say 20% going below his head. What is going, I don't know. But if you say 20%, he understands very fast, 100 ke upar 20. But if you say NPB 1 million, it will not go in within his head. So to make understand the non-accounting, non-finance person, we need to calculate IRR also. And it is considering many benefits of NPB. Cash flow, discounting, time value of money, all these things are there. But it has problem more than the NPB method. We are the finance person. Based on finance, what is best we should be doing? Not thinking about other, somebody is not understanding finance. We will be doing that on his own understanding. No, we can just explain him. IRR is greater than cost of capital. IRR is greater than WACC. IRR is this. They will understand whatever very well. But decision cannot be taken based on IRR. It should be based on NPB method. The third method under discounting criteria, profitability index. What is profitability index? Whatever the present value of cash inflows minus outflow, that is NPB. NPB divided by investment. Suppose there are three projects, A, B, C. In all the three, NPB by investment, NPB by investment, NPB by investment. In the first one, I am getting 1.20. In the second one, 1.30. In the third, 1.90. Which one is better? 1.30 means what? By investing $1, I am getting 0.3 extra. Basically, it will be coming 0.3, not 1.3, NPB divided by investment. Suppose NPB is 3 million, investment is 10 million. So 3 divided by 10 million, 0.3. 0.2, 0.3, and the last one minus 0.1. Because in the last one, the NPB is negative. So it is NPB divided by investment, it is negative. So in all the three, where the profitability index is greater, I should be investing my money there first. When you have limited funds and you have many projects you can do, first of all, you want to invest your money where? That project which is giving you maximum return, not IRR. NPB divided by investment. NPB divided by investment is giving you profitability index. By investing $1, how much money you are getting in different projects. The project which is giving you higher income, there you should invest your money first. Whenever we have capital scarcity, then in place of NPB, we should be selecting profitability index. It is based on NPB only, but it is giving you by investing $1 where you will be getting maximum income. There you should employ your money first, your total income will maximize. It is based on NPB, but it is called profitability index. Under discounting, there is one more method, discounted payback. I will discuss that later. First of all, non-discounting methods. Normal payback. Normal payback means I am giving Indu 100. She is giving me after 1 year 20, after 2 years 30, after 3 years, 40, after 4 years, something. I have given Indu 100, Bindu 100, and Bindu is giving me after 1 year 20. Second year 30, 20 plus 30, 50. Third year 40, 50 plus 40, 90. I have given 100, she has given me 90 in 3 years. And fourth year, she has given me 30. So I am getting my money back from Indu, not the return in 4 years. Not. In 4 years, it is greater than 100. In 3 years, it is 90. 10 was still left. So in the fourth year, I got 30 in 1 year. Fourth year, 1 year. So 10 in how many years? 0.33 year. So the payback from Indu, 3.33 year. Whatever money I have given to Indu, not the return, that money principal I am getting in 3.33 year. In the project, why this is required? We are investing 20 million in the project. When we will get back our 20 million without time value of money, no present value. Whatever cash flow we get first year, second year, third year, on that basis only. Whenever again we have funds, we require those funds in the business regularly. Our liquidity is not good. We always require to pay back to creditors, this, that. We can't invest our money for a long period. We want money back fast. Then in place of the NPB and all that, the best method is the payback. Since liquidity is a problem, then you should be doing the project where you will be getting your money very fast so that you can run your business. Otherwise, because of liquidity, the business will be over. But here we are not using time value of money discounting. Under discounting method, there is discounted payback. First of all, we calculate present value of all the first year, second year, third year cash flow. And then with the present value, we calculate payback. All different figures, calculated present value of all different figures, and then we calculate payback. That is better than the payback. Discounted payback, consider a time value of money, consider a discount rate. Money today, $1 is not equal to $1 after 1 year. So that we are using, that should be used in place of payback. But dono ka purpose is same, that when the liquidity problem, when we want our money back very fast, then we should be deciding based on payback, discounted payback, not based on the other methods. All these methods which I discussed are based on cash flow. But when you present PL account balance sheet, no cash flow. It is not based on cash flow. PL account balance sheet is accrual principle, no cash flow. So when we do a project, how our PL account and balance sheet will be affected? Return on capital employed, return on assets, how they will be looking. Maybe our project is good from finance angle, from cash flow angle. But when the financials will be given, balance sheet, PL account will be given to general public, shareholders and others. They will be analyzing based on financial statement. So after doing the project, what is return on capital employed? A return on capital employed is based on profit, not cash flow. What is the profit in the project in 10 years, not the cash flow, divided by the investment in the project. Profit divided by investment, return on capital employed. It is essential for accounting purpose, but this should not be used for decision-making purpose in finance. But when it is good from financial angle, why not it should be good from the accounting purpose also? We should adjust our accounting in such a way that it is good from the accounting purpose also. Because ultimately we need to present our PL account balance sheet to the whole world. That's a regulatory requirement. So in finance angle, in investment appraisal, under non-discounting methods, we consider return on capital employed also. One more which is not relevant here normally, which is not whatever I discussed since beginning, something else. Suppose I am using a camera. This camera will not be going for whole life. 1 year, 2 year, 3 year. Suppose it will be used for 3 years. Can I use only for 2 years? I can. If I will use only for 2 years, I will be able to sell it at a better price. And 2 years, the repair maintenance will be less. But if I will use for full 3 years, I will be able to sell it at a lower price and the repair maintenance will be higher. In every organization, they are using assets. The assets need to be replaced regularly. Computer, laptop, camera, furniture, they need to be replaced. They will be fully utilized in certain number of years. If I want to decide what will be the replacement cycle, how many years I should be using, the camera can be used for 1 year, for 2 years, for 3 years. If I will use for 1 year, what will be my total cost? If I will use for 2 years, what will be my total cost? If I will use for 3 years, what will be my total cost? If I will use for 1 year, the purchase cost of camera plus 1 year repair maintenance minus 1 year and salvage value. If I will use for 2 years, the purchase cost of camera today, the 2 years repair maintenance minus salvage value at the end of 2 years. If I will use for 3 years, the purchase cost today, 3 year repair maintenance minus salvage value at the end of 3rd year. I'm getting 3 different values. The third value will be the highest, guarantee, because it is 3 years total usage cost. But the first year value, 1 year value will be lowest because it is 1 year usage cost. Like this, if I want to decide, then I should be using for 1 year only, because 1 year total cost is lowest. We can't decide like that, because in case of 3 year, it is 3 year value. In case of 1 year, it is only 1 year value. We need to apply time value of money. Suppose the 3 year total cost is 2 lakh. Whatever I will incur repair maintenance in 3 years, whatever I will be able to get the salvage value, and whatever I am paying today for purchase, the total cost is coming 2 lakh. I want to calculate what will be the cost every year whose present value is 2 lakh. What is the cost every year whose present value is 2 lakh? What is that? Suppose every year the value will be X into 0.853. What is that? $1 today at the rate of 15%, 0.853. So X into 0.853. Second X into 0.752. Third X into 0.621. All I'm getting in terms of X. Total, that total is equal to the total cost of the 3 years camera. I will find out X equals to the total cost divided by all 3 factors. That all 3 factors are called annuity. I will suppose 2 lakh divided by that, it is coming 80,000. That means I will incur 80,000, 80,000, 80,000 for 3 years. The value today total is 2 lakh. So if it is used for 3 years, the annual cost will be 80,000 every year. If it will be used for 2 years, not 3 years, the annual cost may be, say, 85,000. It is better to use for 3 years. The total cost is higher, but the annual cost is lower in case of camera when I will be using for 3 years. I should replace my camera every 3 years, not 2 years, because my annual cost of replacement, annual cost will be lowest when I will be using for 3 years. This is called in technical language equivalent annual cost, EAC. When there is an asset having different lifespan possible, for how many years you should be using the asset, when you should replace the asset, then we apply this technique which is called equivalent annual cost technique. What will be the cost for a different life possible? And then based on that, what will be the annual cost for that life? Where the annual cost is lower, I should be using the asset for that period. I should be replacing the asset at the end of that period. Then my business total cost will be lowest. This is called equivalent annual cost criteria. Here it is not relevant, but it will be relevant later in other areas. But for the time being, whatever is there. In practical life, we calculate NPV, IRR, payback, discounted payback, return on capital employed, everything. Because in practical life, you are not given 45 minutes. In practical life, it is not a question. Actual money involved. The decision need to be perfect. The decision should be correct. So we do in simple language, Sam, Dam, Dand, Bhed, everything. We can't take a wrong decision. We can't be lazy. We need to decide properly by doing everything, whether we should be doing the project or not. If you are a project manager, if you are a consultant and doing the project analysis for a company where the project involve 1,000 crores, the doing the analysis, doing this calculation, doing the estimation, helping the team and all that, your remuneration will be at least 2% of 1,000 crore. This is the minimum remuneration, which will be giving you 20 crore. PwC, KPMG, Deloitte, EY, IBM, Accenture, so many Indian companies are giving this money. Forget about the question in the exam. What you need to write, pass the exam, that's forget. But think the importance of this. If you are doing any project, you are doing Cima, that is a project only. You are investing money, giving training classes fees, giving to the Cima Institute, and you will be reaping the benefits for 5 years, 10 years of your life. How much salary you will be getting, how much you will be into, what you will, that you need to forecast, man. Then you will decide I should be doing Cima. Not like that. Prakash Saraf is saying you started doing Cima. That's not done. Every long-term decisions involves these things, and they are not easy to forecast. I have to just said methods, but the methods application based on cash flow, and they are talking about that only. What challenges you will be facing in estimating the cash flow when you acquire the Prestige hair salon? What are those challenges? Explain those challenges in estimating the cash flows. And the second question they are saying, when you will be estimating, deciding that the project should be done, what is the use of the current WACC? What is the use of the current WACC in evaluating the project? That is 40%, the first one 60%. What is WACC? Suppose I am doing a project. I am investing my personal money in the project. Total money ka 40%. And I am borrowing, taking loan, borrowing from bank, debenture issue 60%. Whatever the loan amount will be in the project, 60%. The shareholder money will be 40%. On the loan money, loan providers require 10% return. On the shareholder money, shareholder require 40%, 15% return. Shareholder always require high return. Why? Because shareholders are taking more risk. If the project is not able to generate return, still the loan wala will be given 10%. But if the project is not able to generate return, the shareholder will be getting laddu, nothing. Shareholders are subject to market risk. Read offer related documents carefully before investing. That's the language of the shareholder investment. So for the shareholder, the return is not sure. The return is not sure. Risk is higher. They require higher return. For the debt providers, the return is sure. They will get the return. They want lower return. On 60% money, we want 10%. On 40% money, we want 15%. So on total money, how much we want? 60% into 10% is called 6%. 40% into 15% is also called 6%. 40 into 15, 6%. 60 into 10, 6%. Both combined, 12%. If on 100 we earn 12%, we will be able to both of them whatever we need to give. Out of 100 on 60, we need to give 10%, 6. Out of 40, we need to give 15%, 6. 12 earned, 12 given. They both are satisfied. That is WACC, or that is called cost of capital, or that is called required rate of return. The return 10%, 15%. What the debt holder require, what the shareholder require. The shareholder opportunity cost, blah, blah, blah. Loan wala, everything. But ultimately, what is WACC? Whatever money invested in the project, what is the return required by the investors? The debt providers, the shareholders, what is the return? If we don't able to get that return, we will not be able to satisfy them. Why they will give us money? They will never give us money. So in the project, we need to earn that 12% to give them the return. Now in primary, in the balance sheet, they have equity and debt. The company balance sheet already those funds invested. In the company's existing business, when the money is invested, they require a return. Suppose the present WACC, the current WACC is 15% from the new project when we are taking over Prestige here. Whether in this new project we want that 15 only, we want more, or we want less. Whether we want the current WACC from the new project, or whether we want a different return from the new project. It depends upon different factors. The first, whether the new project is having risk same as our existing business. Somebody will say that we are a salon business. This is also salon business. We are doing this for 60 years plus. This is same business, same. But presently in the salon business, as per the pre-scene, the up market, we have only franchisee model. But this we are going to do self model. This is different. Because we have self model, 40 franchise, 40 self are there, which is pop. Not this, but here it is seen self model, a different risk. The premium quality customers, whether they will come or not, maybe they were liking prestige, they don't like Trimere. So it's a different risk involved. The required rate of return will be different. Maybe in the existing, when we go in the balance sheet, the debt and equity is 50-50%. We will check in the balance sheet. But in the new project, the 20 million, we are not investing 50-50%. 60% debt, 40% equity. How can we say that the existing cost of capital will be for the new project? We can't. When the new project is very small, this is as per investment is small because our balance sheet size is very big. Then in that case, we can say existing WACC we can use. But if the new project is big, large, maybe it is in the same business, it cannot having the same risk. We need to calculate new required rate of return for the new project. Then we can decide whether we should be doing the project or not. That they are asking in the second one. What is NPV? How the project analysis done? What is WACC? All these maybe we are knowing, but we know very superficial. So for that reason, the write-up is also superficial. The marks will be deducted because if you are writing wrong thing, which is not acceptable, then I am not going to give you marks. You need to be perfect in your writing. This, whatever I discussed, is the technical part. Indirectly, I think you can understand the familiarization first part, exercise 1, is already discussed in this discussion. This is covering the first part of exercise and this is covering this part also. But now, if we write these things, this is very big. We cannot write this much. We need to think about timing and we need to think exactly how we can mold our answers in the exam as per the requirement so that we will be able to get good marks. Reading the stuff, reading the requirement, reading the reference material will take around 5 to 7 minutes. I think for planning the answer will take further 1 or 2 minutes. So normally students should take, or generally they take 7 to 10 minutes before writing any answer. So out of 45 minutes, verse to verse, 10 minutes gone. Reading, thinking, all that gone. You are left with 35 minutes. In 35 minutes, 60% time you will be giving to the first answer. 35 into 60% is around 20-21 minutes. And 14 minutes you will be giving to the second answer. As I said in the first class also, with a font size 11, your speed of writing the answer, 21 minutes means 1.5 line per minute. So 21 into 1.5 will be coming approximately 35 lines. 14 into 1.5 will be coming around 20 lines. Around 35 and 20 lines, around 55, 60 lines should be the answer. You can type more because by looking at the keyboard, you can type more. Not typing speed required. Somebody will say that, sir, I can type without looking at the keyboard. They are looking at quality, not the quantity. Obviously, the quality will not come by less quantity. If the answer length is less than 50 lines, it's less quantity. Then the marks will be less. We will not be able to score proper marks. If we want to pass at least 50 lines, we need to write the entire, both the parts. You can say 30-20 line, 35-15 lines, something. So don't think that if you know the first one, you will just write the answer for the first one. Second one, you don't write anything, just 2 lines. By that, we cannot pass management case study exam. Now, to think what you need to write, go in the business, not think about the technical stuff. Whatever I said was technical. Go into the practical aspect. The Prestige here is a upmarket saloon chain. They are in the central and capital city. The newspaper article says that against the company, some newspaper article came, which is talking about some fraud in the taxation. Their directors and management already jailed and they are imprisoned for 10 years. For that reason, they want to sell the business because who will manage? And the maximum as franchisee model. And those franchisees are ready to sell their franchisees to the anybody. Now, this is a newspaper article. I am not the only person who will see the newspaper ad. There are my competitors, so many competitors given in the pre-scene. They are also finding the ad. They are also finding it lucrative. So everybody will fight for acquisition, not only we. So how it will be giving a low price acquisition is a question mark. Can't say, man. But still you can say that CEO is saying that we will be able to acquire at 20 million. CEO is not a mad person. He is the company's CEO. So we can understand that he's saying something with logic. But then when we acquire, we will be running as a self for some period, maybe for 1 year, 2 years, we don't know. And wherever we will, which saloon we will be getting success, we will be offering the franchisee at good return, good franchisee fee, good royalty, so that we will be able to get more and more income out of this model. Because in the scene model, we generally don't go for our own operations. We always go for franchisee model. That's our business model. But here for that, we want to go for the franchisee model. They are saying, money later. First of all, we will be going for self model. So that we need to analyze, that we need to check, and that we need to incorporate in our decision-making process. So they are asking, identify and explain the challenges we will face when trying to quantify cash flows to use when calculating the net present value of the acquisition of Prestige here. We can say in the beginning, in the first paragraph, generally in any capital investment decision, investment appraisal decisions, NPV is treated as one of the best method. NPV means present value of inflow minus outflow. When the NPV is 0 or positive, we are getting our required return. It is directly correlated with shareholders' wealth maximization. We should be accepting the project. Next para. But in the NPV, the most important problem is forecasting the cash flows. In this type of project, acquiring Prestige here, the problems which we are going to face, how we can deal with those problems, how we can solve, I am explaining below. Because you are talking to your boss. So you are telling him, I am helping you, I am explaining you. Next, you will start a paragraph. Initial investment. It is estimated that by our CEO that initial investment for acquiring Prestige Hair Salon will be $20 million. But this is a newspaper article. We have already in the market competitors. We already know that this Prestige Hair is in the capital city, central city, very convenient locations. So there will be many opportunists will be targeting to acquire Prestige Hair. And when more and more competition will be there, when demand is there and the supply is limited, it's a general rule that the prices goes up. So it is a question mark that we will be able to acquire capital city at a low price. One thing is good. It is fraud identified against the company. The promoters or any who are already there for imprisonment. Maybe because of that, the investment amount will be going down. But then it is not sure that we will be able to acquire at 20 million. And the initial investment is a very important cash flow, important factor to decide whether we should be able to take over or not. We should be doing takeover or not. So before put our bidding, before competing with others, we should analyze the situations. We will see that whatever the assets Prestige has, what is the market value of those assets? Based on that, we can estimate a proper initial investment amount so that our investment appraisal will not be going haywire. You are writing about one investment appraisal, a logical way explanation. When I'm saying this is not the technical NPV, present value, $1 and all. This is just technical knowledge so that you get in the feel. In the exam, usage of technical knowledge is only 10%. Somebody will say that, sir, I don't know how to calculate NPV. Tel lene gaya. Somebody will say that I don't know calculate an IRR. No use at all. Because even though the person in the practical world know, but they can't perform in the practical world in the org. What is their purpose of knowing the NPV? Cima is saying that we will not test technical. We will test practical application. You say that you know investment appraisal. Can you solve an investment appraisal practical problem in the organization? That is the purpose of Cima exam. It's fantastic way of testing your knowledge. Not a single exam in the world is testing the knowledge like this. You are taking tension, NPV, IRR and all that. You don't need to take tension. You need to take tension, technical knowledge, only accounting. Non-accounting part, we will finish like that, blah, blah, blah. Nothing will happen. No tension at all in life, believe me. I am going slightly slow. The reason is only one, this is only the second class. The way I speak, the way I throw the things, and even though I give so many videos, but normally students don't see. So I will be slightly faster when I will be saying further. Don't take tension. When anybody will not understand, you just need to repeat. Okay, I have not understand, I will explain. Now, the second cash flow. The second paragraph I start. The revenue. Estimating the revenue from the cream cloud customers, because it is seen that top-end model. Celebrities, sports person, high net worth individuals who only want the quality. They are ready to throw money. The Prestige here has already built a brand. When it is converted into Trimere, whether the customer like that or not, whether they will correlate with our scene model, whether that scene model is good or not, whether that like we don't know. Maybe we are able to get more customers. Estimating the customers' revenue in the beginning will be difficult. At the same time, in the scene model, we are going to go for the self-owned model. There we need to employ fantastic retainers, fantastic apprenticeship, fantastic hairdressers. They are not easily available. And if that we cannot offer, how can we estimate that the sales will be this? For that, we need to be pretty sure. We need to analyze the customer requirement, those who have been served. We need to go to their detailed analysis of the customer service. Who are the customers who came earlier? What type of quality and things they require? Can we offer that? Whether we will be able to attract them further that way, whether we will be able to attract further others, other scene model, other salons are there, what they are charging. That will help us to decide to estimate the revenue. Because it's the most important component of the cash flow. If that is wrong estimated, then the entire analysis, entire decision about takeover will be going wrong. The third, the expenditure, operational expenditures. All these things when you are writing, They are not related with any of your technical knowledge. They are purely based on what they are giving here, what they are telling here. When you will sell to franchisees, maybe say 2 years later, how much franchisee fee you can expect? How much royalty you can expect? Estimating that is very difficult, because which franchisee, which cell phone model will be successful, which saloon will be not successful. In a successful, how much the franchisee will be ready to pay, very difficult to estimate. Doesn't mean that we will not estimate. Every project estimation is difficult, not only this whole, because that is the difficulty in a long-term project. You need to write the answers as per your time availability. When you find that you are writing very much, you are seeing that you have already used in more than 21 minutes, 23, 24, still you are thinking, I need to write more. You are destroying your paper, because you are having only 35 minutes. And the second part is still you need to write for 14 minutes, which is only 10 minutes left. It is, वो क्या बोलते हैं, खतरे की घंटी. If you go on giving time only in the first part, because you are getting rhythm, you need to understand it's an exam also. It's not your practical life where you, so you need to control yourself, finish it off, and go into the second one. I can say that whatever the model answer written, we can write better than model answer. Believe me, we can write better than model answers. Model answer is not written by one faculty. Model answer is not written in 35 minutes, 20 minutes. Model answer written by 10 persons together, using so many materials, and in 2-3 days. So model answer is 360 degree. By looking at the model answer, don't curse yourself. I will not be able to write in 20 minutes the model answer, but I can write that much which can give me marks, because according to me, it's a simple question. It does not require any technical knowledge, group accounting, non-current assets, revaluation model, leasing, feasing. Pretty simple, man. When you will be going in the exam, regularly studying, you will not have any doubt relating to this area forever. The doubt will be there only relating to accounting part, as I'm saying since the last class, because it is pure practical, man. Many of you must be doing this in your organization as a project team member and all that already. Then the second part, which I already discussed, current WACC of the company based on current debt equity ratio, based on current business risk, based on current required rate of return for a debt and equity, we are getting the cost of capital. But in the new project is in top scene business. In the new project, we are going to, what do you say, going for the self-owned model, not the franchisee model, which we don't have in the past, because we have the middle order, we are mid-sized saloon we have, but that we have only franchisee model. So using the existing WACC, whether we can do or not is a question mark. We can use the existing WACC because the size of the investment is not very big as compared to our existing. We can use the WACC if the debt equity ratio remains same in the new project and it is incremental. But next para, if we consider that it's a different business, it's a organization prestige who has created fraud, bad will, and customers also, the top rated customer. Think about those things also, ethics, that we are taking over an unethical business. Maybe the risk is high. There are so many competitors already there in the market under self-owned or franchisee model, managing our resources. So it's not exactly same what we have done. The risk is different. Maybe we will be raising funds in a different ratio. The risk will be different. The capital structure will be different. Then in that case, for the new project, we will be calculating a revised WACC, required rate of return, to decide whether the project should be done or not. Because maybe on the basis of asset base, it is not big amount. But if we go in their balance sheet, suppose we go in their financials, then in the financials, the figures are in million. Okay? And in million in the balance sheet, the figures assets are say around 200 million. And this is a project. This is a project where CEO is saying that it will be 20 million, 10% of your entire value of assets. What do you think? 10% is a significant amount or is a small amount? You will not be able to deal with this. You will say more or less singular. Suppose in my business, the investment is in Indian currency around 10 crore. If I will do a project of say around 1.5 crore, it will be a big project or it will be a small project. Normally we think that double-digit investment is a big project because in 10 crore, my income is around 1 crore, 10%. So in 1.5 crore new project, if it is a loss, my whole income will wipe off. If 1.5 crore I don't invest properly, lost, then 1 crore is my total income only. I will be going in the loss proposition. So it's not small. On the asset base, it is small. But on the earning base, if you compare, then the earnings of the company is how much? It is around, you can say 57 or this. And 20 million is not a small amount in terms of our income. So we can see that it's a significant also. And in this case, significant, the risk is generally different. Then in that case, we should be calculating the revised WACC based on risk, based on the capital structure, and that should be used for investment appraisal, whether for NPV, whether for IRR, or whether for any method. We should be doing that and analyzing the project. That you need to write in the second part. The second part is slightly technical, I will say. But the first part is not involving any technical aspect. It is purely the practical aspect. What problem we will face in analyzing the cash flows challenges and explain them. Explain them means how you deal with them. Explain them. Anything can come in exam. This is just a situation. Now, even though we discussed in the class, but if I will tell everybody, all of you to write the answers, we are in a better position to write as compared to before the class. Yes. But still everybody will write a different answer. There is no right wrong here, sir. Just that your answer should have logic, should have justification, should be in the paragraph structure, should be with subheadings and then writing the paragraph, should be of a proper length, should be related with the scenario, should be using the preceding material that the examiner want, should be based on the requirement. Many times the students are writing something very good, but which is not as per the requirement. The marks will be 0. Because the examiner is concerned with what is asked in the question. Are you covering that? Then you will get the marks, otherwise not. And if you are writing as per the requirement, but the length is very short, you are not using the scenario properly, the answer is, you can say, so many portions are irrelevant, logic is not given, then also we cannot score marks. Only first part answer written, second part not written, we can't pass the exam. But it is more than technical, it is practical way of approaching the business. Anybody in the world may be knowing NPV, IRR and all that, but can they apply that here? If we do MBA from a very good university, IIM and all that, these things they ask you to do in a business. That's better than Cima. Because they ask you to go somewhere and apply whatever you studied in 6 months and next 6 months. Good IIM, good MBA, not normal. Very, very good MBA, IIM or within 10 rank. Then they will be telling you that you have studied this. Now go for internship in a company for 6 months and do these things there. Submit the project report, whatever you have done. This is directly practical. Here, Cima is saying that you are working professional. For that reason, you are going here. You have done masters. So we take your knowledge to the next level. Maybe we are not able to take you to the internship and asking you to submit the project report, but still the last leg we are doing that, can you practically solve the problem of the organization? If you can, you are having the authority, you have the right, you have the competency, skills to become the finance manager. After passing the exam, you are a person who can become the finance manager of a company, because you can handle the issues like a finance manager. You can handle the practical issues, because always the employer are telling to the course providers that students are qualified, but they are impractical. They are not practical. They cannot solve the business problems. We are not interested in hiring them because they don't solve the problem. They know the technicality, but they are not practical. Cima is already taking you to the practicality level. Technical knowledge not required, practicality. That's the Cima exam, beauty of the exam. I think everybody must be understanding or liking the way they are approaching to the syllabus. In every course other than Cima, so many things are there. But what is in the Cima, that is not there in every course, sir. And this cannot be done by a normal man, because you are the finance manager. You are holding the issues, the practical issues, and then giving the solution. That cannot be done by a normal man. For that reason, you are a Cima prestigious qualification, giving you ACMA and CGMA, which has very good value in the market. When you will be going anywhere, sitting anywhere, you will be able to differentiate yourself with others. That's the beauty of the Cima course. I want to move forward. If anybody has anything to ask for the time being, I will look your suggested answer which you have submitted later. Don't worry. In the class, we don't want to waste time. Bindu, Chahana, Chinmay, Gopal, Suraj, everybody. Surajit.
No, sir. Nothing to ask. Everything is clear.
Okay, sir. But Surajji, we need to write the answers. Otherwise, we understand everything. We read the model answer, we understand. We are in the class, we understand. But in the exam, students are not able to write, not able to think very fast. And the time is a pressure. In exam, you are getting 45 minutes only. So not a single student, even though he is the champ of the world, can pass this exam without practice. Understand, sir? Whether we give exam in May or in August or in November or in February 2026, doesn't matter. Okay?
Okay, sir. I will do.
And this is not acceptable कि I am doing this, that, this, I don't have time. नहीं चलेगा. So ये कम, 2 घंटा कम और चुपचाप से होमवर्क सबमिट करिए. ठीक है?
Okay, sir.
Sorry, sir.
Okay, no, sir.
Because if you don't pass, then you will curse yourself. Me also, I will curse you. We don't want that. We want you should pass, you should be happy, I should be happy. We should be enjoying our success that we want. Right?
Yes.
So that is not possible without hard work, sir.
Yes.
Yeah?
Yes, sir. Definitely. Thank you, sir.
Okay, sir. The practice task 2. Same way we will discuss, first of all, read the requirement, discuss the technicality, whatever relevant behind that, then what should be the answer, how we can write and all that. So you must have written the answer. If you find that you have submitted a very bad answer, you can say in the mail, sir, don't check my answer. Don't waste your time. But you cannot submit again, sir. It's all done. We are already discussing everything. I will share the model answer also. You can go through. These all are given by Cima Institute, Kaplan and all that, not prepared by me. ठीक है? सब पका पकाया मिला है. लेकिन हम वो नहीं डिस्कस कर रहे हैं जो लिखा हुआ है. We are making ourselves ready in a different way. But we need to refer the model answers. I'm not saying that we should not refer. We have to. But our class is designed in a different way, not the copy paste of the solution. Then checking your answers, evaluating them, guiding you. I will not be giving you marks for the time being, but I will be giving you comment where you are doing wrong, so that you can improve, you can do better research, you try to write a better answer. The improvement should be there in every class. That means you are going in the right track, right direction. Wrong, right is not a question. You can write wrong. You may be writing not correct. नो प्रॉब्लम, कल एग्जाम थोड़ी ना है, नो इश्यू. So the requirement is, this is less marks, this much small question will not come. Always 2 or 3 requirements like the previous one. This is only one. So you need to complete the write-up faster. 15 marks into 1.5 minutes. Sorry, you can say that out of 180 minutes, we take 10, 10, 10. 30 minutes gone. So our writing time 150 for 100 marks. So 1.5 minute, and then per minute 1.5 line. 15 minutes, 1.5 minutes. That means 22. 22 into 1.5, around 35, 40 line answer you need to write. Okay. In relation to try, first of all, read the requirement very carefully. In relation to try-mere business model, evaluate the impact that the diversification into luster land would have and the challenges it creates. Again, I am reading for me, not for you, because I'm not understanding by reading one time. In relation to try-mere business model, how we are making our products, how we are selling, how we are connecting with the suppliers, how we are connecting with the customers, how we manage our supply chain, how we compete with others. That is called business model. So in relation to the try-mere business model, evaluate the impact that the diversification into luster land would have. Maybe luster land is a new country, new place where we want to take try-mere as our saloon business. Evaluate the impact that the diversification into luster land would have. Whenever we say evaluate, positive, negative, pros, cons, daya, baya. Evaluate the impact that the diversification into luster land would have and the challenges it creates. By going into luster land, what are the pros and cons? And what are the challenges it will create for us if we go to luster land project, something, whatever. What they have written on the top. You received the email from the manager. Again, your senior, his boss. You need to say, yes, boss, yes, boss, yes, boss. To the finance manager, me, you. From the senior finance manager, Megan. Today, maybe the name you don't able to remember. But so many times I will be using in the question these names. So you will be able to remember by the time of exam. You need to think Megan is actually in existence and he is your boss. CEO is actually in existence, he is that person. ऐसे feel आना पड़ेगा. Then your answer will be going to the next level. Today, diversification into luster land. Please see the attached extract from the minutes of the recent. Again, board meeting minutes is given below. Luina Makandi has asked me to put together, CEO, ask the senior finance manager to put together some information for the next meeting, next board meeting. And I need your help on the following, man, relating to the luster land projects. How our business model suit, how the evaluation need to be done. And what are the challenges we are going to face in the luster land projects. Extract from the board minutes, confidential. That means this information you are getting from SFO. Don't say to your family members. Don't say to your friend. Whether this much ethics we follow, we should. In exam, you should. You will say to your wife, your husband, your brother, sister, anybody. Confidential means confidential. Business means business. Don't disclose to anybody. Become an ethical person. So extracts from the board minutes, your SFO is giving you. Confidential. Barbara Wolnick, finance director, stated that she has recently returned from a hairdressing industry exhibition in the neighboring country of Lusterland. From India, suppose Sri Lanka, Modi has gone there. Or maybe from UK, Ireland. From Ireland to UK, somewhere. Feel that it is not a question. It is in neighboring country. Our finance director visited and he attended a exhibition in the neighboring country of Lusterland. During her visit, she gained valuable insights into the country's business environment. So she was very much affected by the business environment, the salon and all that. The exhibition was relating to that. And the characteristics of its hairdressing salon industry. Barbara Wolnick. Prime Mayor is always looking for, this is Barbara Wolnick, finance director, said this in the board meeting. The board meeting minutes you are getting. CF, senior finance manager, given you these board meeting extracts. Again, the Barbara, what said he in the meeting? Prime Mayor is always looking for opportunities to grow and increase profitability. Every private company do that. Private means listed also. Every organization, every business would be looking for this. Prime Mayor is always looking for opportunities for growth and increase profitability. We have been exploring the options to expand into the neighboring country of Lusterland. We were already trying to do that. As you know, the hairdressing industry in Dageland and our country is highly competitive, making further expansion very challenging. Lusterland presents a growing market, India, growing economy with significant potential for our franchisee model. So our market is already very competitive, very developed, but this market is growing market. So we will be able to grow very fast here. The finance director is saying this in the board meeting. You are getting the board extract. Barbara then described the characteristics of Lusterland and its hairdressing industry. What he explained, that you need to imagine. Khayali Pulao. In terms of market potential, Lusterland has a sizable population with a growing interest in fashion and beauty trends. In case of market potential, Lusterland has a sizable population. Good. India, with a growing interest in fashion and beauty trends. So Suraj, whether your wife interested in beauty products or not?
Definitely, sir. Definitely.
There are so many ladies here. So everybody understand, bring that feeling from inside. That is not written anywhere, sir. You need to bring that feeling. Then you cannot write an answer for this question. आप सोचेंगे फेल होंगे, पास होंगे, आंसर ये मत सोचिए यार, प्रैक्टिकल बनिए. कौन सा ऐसा गर्ल होगा जिसको सजना नहीं है यार? है कौन है ऐसा? चाहे कैसा भी चेहरा हो, whatever body is there, you want to look good. I meant to say men also, but women more. Their beauty is more important. So they are saying that, sir. He has understood everything. Lusterland has a sizable population with a growing interest in fashion and beauty trends, which can be attributed to an expanding economy, providing a larger demographics of young adults with increased disposable income. India is in this position only. Increased disposable income, young adults between teenage to the age of 30, they are very much concerned with their looks and all that. And the population is very good. So market is ready. Just go and win the race. That they are saying, man. Lusterland hairdressing industry is moderately competitive. Hairdressing industry is moderately competitive. Not like us. थोड़ा बहुत competition है यार. वैसे इंडिया में भी है. ठीक है? Comprising a mix of local independent salons and some smaller chains. Independent are more. Some chains are also there. We will be competing with them. The country has unique cultural nuances that may influence consumer preferences and service expectations. कोई भी in any service industry, you cannot satisfy everybody. You give your heart, soul, everything. In the service industry, the people will say, I am not satisfied. Teaching industry, that industry only. I cannot satisfy 100 out of 100. My target is to satisfy 90, 95. Because somebody will say, you have not taught that. You have not explained this. I may not be saying he or she is wrong. But service is not, quality cannot be tested on certain 100 parameters. So it's a service industry, salon, product, hair, this, so many things are there. So there is a culture that the service is very demanding, expectation is very high. Like in India, you want to pay 100 rupees and you want the best makeup. 100 rupees में क्या मिलेगा, नहीं क्या है सूरज? So वही expectation यहाँ भी है. The luster land regulatory environment includes various business regulations, such as those relating to franchising and employment laws. Their laws may not be like our laws. Our Dageland and Lusterland laws are different. Along with health and safety, logistical factors, including chain management, salon setup, and franchisee support also need to be considered because it's a different country. Giving them all the support will not be easy. Sending the products there, managing the supply chain, setup of the system, franchisees appointment, this, that, they are training, apprenticeship, all will be different, man. Because bagal mein hai, you can reach. You have so many education center also. Wahan to nahi hai. So it's a difficult business ball game, man. Same business, but in a different country, it's not simple. Prepare the work that Megan has requested. Just that I mean to say that relating to this, I'm telling. I was interested in starting my tuition center in Middle East. Because normally CMA, US, Cima, ACCA, we get so many students from Middle East, Dubai, Tanzania, Saudi, all these countries, Qatar, Abu Dhabi, many students are always there. So I thought that how to start. Then just out of the past 1 or 2 year student, around 5 months gap, I messaged to 20 students. My objective that I want to start a tuition center there. The classes will be online, but I will be going every month in Dubai and will be taking physical classes also, so that the student will get a different feeling. Okay? I messaged this to my 20 students, maybe 15, I don't remember. A voice message I designed and I messaged to all of them. I am already in this business, sir. Already teaching ACCA, Cima, CMA. Already coming from blood. There is no tension. So I can teach very well as per me. May not be as per everybody in the class, sorry. So I thought that my student understand me. And if they have the resources, then we can start a partnership. So one of the student was already working in an organization that is an IT company. I cannot disclose the name. That IT company is mainly, you can say, providing AI services to their clients. But they are big clients. But they have also the education model they want to develop. That is a software for 7-8 class students like that, like we have in Kolkata, Pathfinder and all that. They want to go into that venture. I said that this will be a very good venture for all of, I mean to say, my student connected with me. He said that, sir, we are interested. You make a project report. Then I made a project report that what my objective is, how I will be able to achieve, how I will be able to target the audience. Because I have seen always many times, there are students who traveled from Dubai to Kolkata, not recently, and then they have studied here. The staying and studying here and paying the fees is far lesser than whatever the cost is there in Dubai. So for that reason, I said that it is doable, but the fees will be charged like Dubai market, because there will be additional expenditures going to Dubai, staying there in hotel for 2-3 days, conducting physical classes. They have the place. We don't require any rental agreement or anything, but they will give me the resources. We will have a physical office. A student can visit that office. They will do the marketing part. They will give me the resources and I will give my knowledge. I will teach them on monthly basis physically. Okay? So I made the project report, again revised the report 2-3 times. The project reports which I discussed, the number of student forecast, based on the student I have taught, based on in the market, whatever the students are there, I made the project report, I did the tuition fees, I deducted all the expenditures and everything, all forecast. And I made the forecast for 3 years. And according to me, it was a very fruitful project. Because according to me, I am believing on my quality. And I know that in Dubai, Middle East, IFRS, ACC, all these things will go like anything. CMA, US, Cima, all these things will run like anything. Then my student, who is also a senior person, he is of the age of 50 years. Don't think as a student of 20 years, 50 years age. He liked my message, the things proceeded. Okay? He saw the message to his senior, the project report and all that. I attended a meeting, online meeting with the senior also. I convinced him, I explained him what I want to do. Then they showed to the senior. Once that senior to the senior shown, then only the last leg was left. The senior to the senior came, and he knows somebody in Kolkata. I am not naming. He said that, sir, why anybody will take classes from Dubai at a higher charges? When you are already giving online at this price, why? How can you charge double? I said, I will be going there. The physical classes are there. He is not ready to understand because of somebody has said. And he said, no, project gone. Stop. Surajji, what do you think? Is it possible to do that? Should be doable or not?
Sir, at the same price, it is not viable, I think. You are providing online class, whatever charge you are charging for online class, it is not viable for the face-to-face class conducted at
And not face to
Dubai.
face fully. Suppose
Yes.
in a month you are taking online class. Now I will be visiting to Dubai, and 1 or 2 days I will be taking 8 hours class physically in front of you. Your doubts, mock paper solving, this, that. Don't you think so? A different feeling.
Definitely, sir, definitely.
So उसका पैसा तो लगेगा ना यार.
Yes,
उड़ने
sir,
का,
of course.
जाने का, आने का, रहने का कॉस्ट है उसका. तो उसका पैसा तो जुड़ा जाएगा ना.
Yes,
और
sir.
मेरे को पर्सनली ऐसा लगता है कि ये बहुत जोर का चलेगा. Even I connected with my old student 20 years back, earlier than Suraj you, in 2001-2. He is staying in UK. He said that, sir, we can start for UK also. बात नहीं हुआ बाद में. He is saying that for UK. So many students from UK. Don't you feel there will be a different feeling if I will be physically present, not every time? It cannot be a full physical model. It will be a blended model. Don't you think that it will be a better feeling or better understanding as compared to online model? What, Chahana? What is your view?
Sir, I think personally online is better because you get recordings as well. Even for physical classes you do sometimes, but this way interaction is possible for people. I mean, I don't have a Prakash sir
No,
over
no.
here, so
No,
it's
the
Mhm.
The question is that why am story started this? It's a practical, it's not Hawa. I'm saying all the fact. Because they are doing that only, man. They have already successful business model, the way they are doing in one country. In another country, a finance director visited. He liked the ambience, he liked the people understanding the growth, the population, the salon type and all that. Maybe some problems are there relating to logistics, relating to culture, relating to logistics, relating to health and safety, relating to legal laws and all that. But still they want to expand. So what is your advice? They should be going there in Luxorland or not?
I think yes, they should, because there is a growth opportunity. They
So for me, you were saying that I should not be going to UK, sir, na? And for them, you are saying yes. Why?
Because sir, over here it is, I think it is viable. I feel it is viable to go there and enter a new market because there is a
Maybe I'm
lot
not
of
interested in
opportunity.
UK for the time being because it will be very costly. Going there and coming there is very
Exactly.
But for Dubai, the cost is just like Mumbai. Within 15 to 20,000, if you book in advance the tickets, and maybe the place is already ready with them. So it's just additional expenditure of some hotel, maybe a budgeted hotel, not very high, 5-7 star. Why require? So maybe a hotel of 5 to 7,000 per day, 2 days, and then going and coming back from there, maybe around 20,000, 30,000 done. So maybe a batch 2 times I will be going physical classes for 2 days. The feeling will be different. For that
So
feeling,
what about, yes.
yeah, that will create a differentiation because there also the tuition providers are there and I'm competing
Exactly.
from them, not competing from here. So when they are charging a particular fees for the online model or maybe the physical model, we will be able to compete with them. We will open a place in front of them only. Huh?
Okay. Okay. It sounds better now.
सारी बिजनेस यार कैसे नहीं चलेगा? आप लोग डीप में नहीं सोच रहे हैं, हम डीप में सोच रहे हैं. You are thinking superficial. I am going very deep. I am understanding the mentality of the student. From Dubai also, maximum students are professionals. I will be reaching there on Friday, Saturday, where then holiday are there. They will be able to attend the classes. And physical interaction is far better than online interaction. But full physical, nobody will come. If I will stay there and take physical classes regularly, people will not come. That changed. Even in Kolkata, I will say, Suraj, come in the tuition center to take the class. Suraj will not come. क्या सूरज जी आएंगे क्या?
सर आप
समझिए.
कराएंगे, सर आप
नहीं
कराएंगे तो आ
आएंगे
जाएगा.
सर. डेली इतना गर्मी में दिस सो मच प्रॉब्लम इज देयर. यू आर नॉट गोइंग टू कम सर. वो खाली बोलने का ही है. सो दैट आई अंडरस्टैंड. बट गिविंग अ ब्लेंडेड मॉडल इज वेरी डिफरेंट सर. एक आप फोटो में देख रहे हैं, एक सामने साक्षात अलग है सर फीलिंग. थोड़ी ना दोनों फीलिंग को बराबर कर सकती है.
Yes, sir. Sir, I attended your face-to-face class, sir, so I can correlate.
हम लोग यहाँ पर इसको रोक रहे हैं भाई. सॉरी, because we have 13:42. Otherwise, my team will be at danda. So we will be discussing, carry on this discussion. But this second part, you are getting that there is no technical knowledge for this, no technical background. Whatever situation they have given, you correlate any country in Asia having good population. The laws are different than here. You need to write that. And you need to evaluate benefit, far, good, that, big population, all that you need to cover in around 35-40 lines. There is no technicality involved with this. This is, you can say, related with E2. E2 means purely open-ended. Nobody need to study E2 from any book. Just be practical in your business. आप सोचिए आप सैलून चला रहे हैं, तब फीलिंग ज्यादा आएगा. आप ऐसे सोचेंगे यू नीड टू राइट द आंसर फॉर द एग्जाम, फीलिंग नहीं आएगा, बंद हो जाएगा. हम ट्यूशन चला रहे हैं, हम तो फीलिंग से उजागर कर ले रहे हैं कि हाउ आई विल बी एबल टू अट्रैक्ट स्टूडेंट्स इन दुबई. साथ तो देना होगा ना यार. आई कैन नॉट मैनेज फ्रॉम हियर एवरीथिंग. आई वांट समबडी who will be managing there the marketing, a physical place, taking some classes. Let's see how can we don't win the market. I told him that you give me 6 months, I will show you the result. Not understanding what should I do. No problem. We will search for another option. But we will go anyhow in Dubai, Middle East. Within 1 year in 2025 only. It's not a question of earning. There are so many students who are not getting the proper support. They want a better quality classes. We are helping them, helping myself and helping them. Not a question of earning. Earning is a byproduct that will automatically come. But main important is when I think about you all, money becomes a byproduct. I don't need to think whether the student will be there in the class or not. I always need to think every second about my student. Then all the things are taking place automatically. That's my thinking process. And I will put my everything in Dubai to develop it. Student, student, student only. How it will not develop, let's see. We will do in the next Saturday. Let's see. If anybody has not gone through, I will share the model answer also. We continue this discussion at the same time. Part B also, I will share the core area B questions by today evening because I will be taking event. It is not ready. I will share. Okay. Thank you. Tada, bye bye. Sorry, bhai. I'm not asking any doubt or there. If it is there, keep it. You can message me. I will reply. Okay.
Thank you, sir.
Yeah. Thank you. Tada.
Thank you.